Hi, hello students. Welcome to Accountancy class of your second PUC syllabus. As in previous video lecture, I have discussed about the meaning, features and need for preparing the financial statements of an not-for-profit organization. So now, in this video lecture, I will going to discuss about one of the main important thing, that is classification of capital items and revenue items. So in NPA, so before going to prepare the financial statements, and you need to know about certain classifications which comes under capital items and revenue items. So here in capital items there are mainly two types. One is capital receipt and capital expenditure. On the other hand, the second classification is revenue items. Under this, revenue receipt and revenue expenditure. Let us know and understand what is capital receipt and capital expenditure. So here the capital receipt is a receipt. They are a receipt of non-recurring in nature and they are not received regularly. They are generally used in amount and those are to be appeared in the balance sheet of the company or organization. Say for example, life membership fees. Generally the life membership fees are used in amount that is to be exceeded more than 1 year. Therefore, we are showing in the capital receipt that is to be in the balance sheet. And the sale of fixed asset. So, if you are selling the fixed asset of an enterprise means you are receiving huge amount of money. That's why you are going to show the amount received in form of sale of fixed asset in balance sheet, and if any special donations received by an organization, that is to be also shown in the balance sheet, that is in capital receipt. So keep remember, capital receipt are the receipts of non-recurring in nature. They are generally used in amount and they are not received regularly. So those are to be appeared in the balance sheet of an organization. Example, life membership fees, sale of fixed asset and special donations. This is about capital receipt. The next is capital expenditure. So what exactly the capital expenditure says and what all the expenditure comes under this head means, capital expenditure is an expenditure. Its giving benefit is not exhausted just in 1 year. It's giving benefit for more than 1 year. If you are spending any amount or if you are making any expenditure in an organization means that expenditure gives benefit for an enterprise for more than 1 year. That is called capital expenditure. Say for example, I'll give a simple example, purchase of fixed asset. Fixed asset means are the asset which are used for a longer period of time. You are spending or investing amount in purchase of fixed asset. Say for example, machinery, that is plant and machinery, land and building, means it's giving benefit for more than 1 year. And also expenditure incurred on fixed asset, whatever the amount of expenditure spent in purchase of fixed asset, those also expenditure comes under the capital expenditure. It's giving benefit for more than 1 year. So this is about the first classification, capital items. The next is revenue items. In revenue items also we have two types. One is revenue receipt, then second is revenue expenditure. So here the revenue receipts, these are the receipts of recurring in nature. So these are received regularly. So generally these amount are smaller in terms and appear in the profit and loss account or the income and the expenditure account, which is prepared by an organization. Say for example, sale of goods means we are selling the goods regularly through the business activities. Whatever the amount received in form of selling goods, those are recorded in the income and expenditure account. And interest received, commission received, all these are income to the company. So that is why these are classified under revenue receipt. So I hope you know the difference. Capital receipt or generally used in amount, they are not incurred or received regularly, but revenue receipt are those receipts which are regular in nature and which are received in a smaller amount and appeared in the profit and loss account or the income and expenditure account. Then second is revenue expenditure. So revenue and expenditure refers to an expenditure. Its benefit is exhausted within 1 year. But in capital receipt, capital expenditure, so it is directly opposite to revenue expenditure. So where the revenue expenditure giving benefit or exhausted within 1 year. So it incur in day-to-day running of business. The expenditure which are incurred in running of day-to-day activities of business. Say for example, salary paid. So you are paying the salary to the employees regularly. So immediately after completion of every month, and you are paying the rent, that is you are making or you are paying the printing charges and the commission paid, all those things, interest paid, all those things which comes under revenue expenditure. So therefore the simple meaning, revenue expenditure refers to an expenditure, its benefit is exhausted within 1 year and these expenditure incur in a day-to-day running of business. Example, salary paid, rent paid, printing charges, interest paid, commission paid, etc. So these about the classification of capital items and revenue items. The next there are certain examples of transactions. So you need to identify whether it is revenue expenditure or revenue receipt or capital expenditure or capital receipt. It may ask in a practical oriented question. So there are certain examples that I have taken. Classify the following into capital and revenue items. The first transaction is legal charges incurred in connection with the purchase of land. So here the purchase of land comes in capital expenditure because we are getting the benefits for more than 1 year. Hence, it comes in capital expenditure. Then second, brokerage paid for rising loan for business. So here we are paid an brokerage for rising loan. The amount is used in the business enterprise. It's giving benefit for a longer period of time. That is why it comes in capital expenditure. Then third, expenses incurred for whitewashing the old building. So here you spent an amount for making the whitewashing the old building. That comes in revenue expenditure because it's giving benefit for less than 1 year. Means we are spending certain amount for maintenance of a campus or a building and to maintain the cleanliness of the premises of enterprise. That is why it comes in revenue expenditure. Then fourth, amount spent on repair to a second hand motor car. It comes in capital expenditure because once you repair a motor car, it's giving benefit for more than 1 year. So that's why it comes in capital expenditure. Then fifth, life membership fees. So already I have given an example while explaining the capital receipt. So the life membership fees paid by the members that would be used for a longer period of time. It's giving benefit for more than 1 year, hence it is a capital receipt. Then sixth, honorarium paid to the secretary. So here you are paying the amount to the secretary for their valuable suggestions and contribution for the purpose of developing a company. So that's why you are paying an honorarium in the form of like remuneration or amount that comes in revenue expenditure that is to be paid regularly. Then last or the seventh one is cost of installing lights and fans that comes in capital expenditure because when you started a business organization or when you established a new venture, you are installing all the lights and fans required at the building that is to be spent in huge amount. That is why it comes in capital expenditure. So like these kind of transactions they given in an exam, you need to classify them either it comes in capital or revenue items. So that's why do revise these points, that would be very useful to write in a practical oriented question. So there are so many, I have taken some of the examples. Prize amount received from a lottery, it is an capital receipt because it is generally in a huge amount and that is to be received. So once where it is depend on a luck, that is the prize amount received from lottery is an capital expenditure. Then ninth is legacies received. It is a capital receipt. So here legacies means it is the amount received as per the will of deceased person. That amount is directly added to the capital fund. So that is why legacies received is a capital receipt. So there are certain terms which comes in NPO. So in the next video session I will explain about the important terms used in NPO. Then 10th is special subscriptions received for special purpose. That is a capital receipt. So while explaining the capital receipt, I have mentioned an example, that is special subscriptions or like donations received for special purpose. It is a capital receipt. Then 11th transaction is laboratory expenditure incurred by the science department of a college. That is a revenue expenditure because they need to spend the expenditure for renovation of lab, and if any apparatus got repaired, means they need to replace or repair of those apparatus used in science lab. Therefore it is a revenue expenditure. Then 12th is prize awarded to students on the college day. So that is a revenue expenditure because for every year the college day is organized. On that day the college is going to provide or give a prize to the students of the toppers of the college. That is why it is a revenue expenditure. Then 13th, installation charges of new machine. So what it is? That is capital expenditure because we are spending an amount for installing the new machine which is giving benefit for more than 1 year. That is why it is a capital expenditure. Then 14th, commission received. That is a revenue receipt because commission is received based on the number of units sold or it is to be received per month. That is why it is a revenue receipt. So we are giving commission to the agent for selling of goods. So when the goods are sold, immediately we are receiving the amount. So that is why the sales will be throughout the year and commission is to be paid regularly. Hence it is a revenue receipt. So like all these are certain examples of transactions. Based on this, you need to classify the transactions into capital items and revenue items. Thank you.